Welcome to the Deep Dive. Today, we're zeroing in on something really fundamental in finance, operational risk. It affects everyone, really, whether you're deep in the industry or, just have a bank account.
That's right. And we've been looking at insights from FinCrime intelligence on this. They offer a pretty sharp perspective on what operational risk means in practice.
Okay, let's try and unpack this a bit. So, our sources define it as, well, the risk of financial loss or business disruption, but stemming from internal things or external ones, too.
Exactly. It's things like internal processes, systems, people,
Yeah.
but also external events. It's a really wide net.
So, it sounds incredibly broad. Like, what kind of things fall under that?
Oh, all sorts. Fraud, simple mistakes, tech failures, not keeping up with regulations, system outages.
Yeah.
The list goes on.
Right.
And our mission today really is to get into these core sources of risk, understand why there's such a big deal, particularly when you think about fighting financial crime.
Okay, so let's jump into those sources. The first one feels quite relatable, I think. Human error. What does that actually look like in finance?
Well, fundamentally, it's mistakes people make,
Yeah.
employees. The source mentions things like simple data entry errors, maybe miscommunication leading to a wrong step, or even just not enough training causing someone to mess up unintentionally.
Okay.
And in finance, the stakes are high. Even small errors can spiral. Apparently, quite a big chunk of operational losses can actually be traced back just to human mistakes.
Yeah, you can see how those everyday slips could have really serious knock-on effects in this sector. Okay, next up is process failures. What's covered there?
So this is about the internal workings. Processes that are maybe inefficient or old or just badly designed from the start.
Oh, okay.
When these are followed, they can cause problems in execution or leave gaps in the controls that are meant to prevent issues. It's like a flaw in the blueprint, almost making errors inevitable.
That makes sense. And, well, everything's digital now, isn't it? So technology and systems risk must be huge.
Oh, absolutely. That's another key area. It covers, hardware going down, software glitches, but also bigger things like cybersecurity weaknesses
Huh.
or problems getting different systems to talk to each other properly.
Right.
Any of those can stop things working, obviously, but critically, they can also expose sensitive data.
Mm-hmm.
And because everything's so connected now, a weakness in one spot can sometimes be used to get into other seemingly unrelated systems.
Mm-hmm. And financial institutions don't exist in a bubble, right? They use lots of outside help, which brings us to third-party and vendor risk.
Exactly. Banks, investment firms, they all rely on external companies for different services.
Mm.
If those providers have problems, maybe a failure on their end or even misconduct, it hits the financial institution directly.
Fascinating.
Well, it could affect their operations, their security, their compliance. Think about a data breach at a supplier or maybe a partner company not meeting regulatory standards. Ultimately, the buck stops with the financial institution.
Okay. And then we get to the more deliberate stuff. Fraud and misconduct. This sounds like a really critical piece of operational risk.
It is. This is about intentional wrongdoing. So
Mm.
internal fraud by staff, people colluding, bribery, maybe unauthorized trading.
Right.
These actions cause direct financial loss, obviously, but they also really damage the institution's reputation and, well, attract regulatory attention pretty fast.
And finally, external events. This seems like the catch-all for things you can't really control.
That's a good way to put it. Yeah,
Yeah.
it includes natural disasters, pandemics like we've seen, geopolitical issues, even big shifts in regulations.
So quite a range.
Definitely. All these can seriously interrupt business. And as FinCrime Intelligence points out, for financial institutions, all these risks we've mentioned, they're amplified because of the sheer complexity, the volume of transactions, and the heavy regulation they operate under.
Okay, that gives us a good map of the different types of operational risk. Now, how does this all link up with financial crime? That's a core focus for FinCrime Intelligence, but the connection might not be obvious to everyone.
Well, what's really striking is just how closely linked they are. If you have weak operational controls, it essentially opens the door for financial crime.
Opens the door. How?
It creates opportunities for fraud, for money laundering, even for breaching sanctions rules. Weaknesses in the operation make it easier for criminals to exploit the system.
Can you give us some concrete examples? Like, how does a control failure become a pathway for crime?
Sure. Think about failing to screen transactions properly
Hmm.
or not doing thorough checks on new customers. That's an operational control weakness, right?
Right.
And it can directly lead to violations of anti-money laundering rules or sanctions. Or, another example, if the systems for monitoring transactions aren't good enough, well, dodgy activity can just slip through undetected, sometimes for a long time.
That makes the link really clear. A breakdown in operations directly enables the criminal activity.
Precisely. And it goes further. If an institution fails on its reporting duties, like not filing suspicious activity reports, SARS, on time, or other disclosures regulators require, that's not just a regulatory breach in itself, it also hinders the authorities. It makes it harder for them to track and fight financial crime across the board.
All right.
And one more thing about unauthorized access. If someone gets into systems or data, they shouldn't get a clear tech risk failure that massively increases the chances of cybercrime, identity theft, major data breaches, all big parts of the financial crime landscape.
So it's really clear that managing operational risk isn't just about, keeping the lights on day to day. It's fundamental to preventing and catching financial crime, protecting the institution's name, and frankly, the whole system's integrity.
Exactly right. Business continuity matters, of course, but so does compliance. So does maintaining that public trust, which naturally leads us to think about, well, how do institutions actually manage all these risks?
Yeah, let's talk about that. What kinds of structured approaches, what processes do they use for assessing risk and keeping an eye on things?
Well, the sources point to a few key methods.
Mm.
One common one is risk and control self-assessments, RCSAs they call them.
RCS.
Yeah,
Got it.
basically internal reviews. Teams look at their own areas, identify the main operational risks they face, and then check how well their current controls are actually working to manage those risks.
Okay, so looking inwards, what else?
Another big one is key risk indicators, KRIs. These are specific metrics they track constantly.
Like warning signs?
Pretty much. They're designed to give early warnings of potential trouble, ideally before something blows up into a major incident.
Got it. Early warning systems.
Then, you absolutely need solid incident reporting. When things do go wrong, and they inevitably will sometimes, you need to capture what happened, why it happened, that's the root cause analysis, and then, crucially, put things right so it doesn't happen again.
Learning from mistakes, essentially.
Exactly. And finally, there's scenario analysis. This is where they test themselves against major high-impact events, things like a massive cyber attack or getting hit with a huge regulatory fine, see how they'd cope.
Right, stress testing for specific nightmare scenarios.
Taken together, all these practices allow for a much more proactive way of handling operational risk rather than just reacting when something breaks.
It sounds like a continuous cycle: assess, monitor, fix, test, repeat. So, given all this effort, what do the regulators expect? Bodies like the Basel Committee, the FCA in the UK, the EBA in Europe, the Fed in the US.
Yeah, the regulators.
Yeah.
They have pretty significant expectations around operational risk resilience. They essentially require institutions to have a formal documented operational risk framework.
A framework.
Yeah, not just a document sitting on a shelf, but something that's actually integrated into how the whole institution manages risk, right across the board.
And what kind of specific things do they look for within that framework?
Well, our source mentioned several common requirements. Things like formal governance structures.
Meaning?
Clear responsibility at the top. Board needs to be overseeing this, maybe specific committees. Senior management has to be accountable. They also expect strong internal controls, obviously, plus an independent audit function to check those controls are working.
Okay.
And clear processes for escalating problems when they're found. Plus, as we just mentioned, they often explicitly require regular stress testing and scenario analysis. And finally, thorough documentation, keeping records of all incidents and what was done to fix them.
And if institutions fall short, the consequences can be pretty serious, I imagine.
Oh, definitely. If you don't manage operational risk properly, you could face, well, big fines from regulators, much closer scrutiny, maybe interventions, and of course, serious damage to your reputation and customer trust, which should be very hard to rebuild.
So definitely not something to push down the priority list. Okay, let's shift gears slightly. Technology. We talked about it being a source of risk, system failures, cyber threats. But it must also be a massive tool for managing risk, right?
You've nailed it. It's that duality again. Technology is absolutely central both as a risk source and increasingly as a solution. On the mitigation side, yeah, we're seeing huge reliance on tech tools.
Like what?
Well, things like workflow automation. Automating routine processes can cut down massively on the potential for human error. Digital controls embedded in systems can help too.
That makes total sense. Take the repetitive task away from the person, reduce the chance of mistakes.
Precisely. Then you've got increasingly sophisticated AI-powered systems for fraud detection. These can crunch through enormous amounts of data transactions, user behavior in real time, spotting weird patterns that a person might just miss.
Okay.
Integrated risk management platforms are also becoming more common. These pull everything together, data, alerts, audit trails into one place, giving a kind of holistic, real-time view of risk across the institution.
A central dashboard for risk, sort of.
Kind of, yeah. And obviously you need strong, up-to-date cybersecurity, defenses against phishing, ransomware, all those external threats that can cause operational chaos.
And it feels like this tech space is moving incredibly fast.
It really is. The sources mention the growing use of real-time analytics, allowing for much quicker detection and response.
Hmm.
And the move to cloud platforms is offering more flexibility, more scalability, faster deployment of these risk tools.
So technology offers both big challenges and really powerful solutions here, especially in that link between operational risk and fighting financial crime.
Exactly, and that's the key message from FinCrime Intelligence, really. Operational risk isn't just one siloed issue. It's woven through everything a financial institution does. Managing it well is inseparable from preventing financial crime and meeting regulatory duties.
Right. So the big takeaways seem to be foster a strong risk-aware culture everywhere, build robust controls, and really harness technology smartly to both spot and deal with these varied risks.
Absolutely. Get those right. And institutions don't just protect themselves, they also help make the whole financial system safer and more resilient.
This has been a really fascinating deep dive. It's clear just how complex but absolutely vital this area of operational risk is, especially when you connect it to tackling financial crime. And maybe just one final thought for you, our listener, to ponder. We know the threat landscape keeps changing. Financial crime gets more sophisticated. FinCrime Intelligence talks about trends like using AI in crime programs or phone scams getting smarter. So the question is, how do we individuals, institutions, need to keep adapting how we understand and manage operational risk to actually stay ahead of the curve in this constantly shifting environment? Thanks for joining us for this deep dive.